call it a case of high anxiety, call it a case of too much of a good thing, but investors are starting to tap the brakes a little bit, take their foot off the accelerator. We've been surveying our readers since before the pandemic began, as you know, and I've been able to share those results with you, but only about 19%, according to our recent survey, intend to put more money in the markets. About 54% say they're just going to sit right here and let it ride. 60% say the market's overvalued, and a lot of them, Dom, are pouring into index funds. They're getting out of some risky option bets. They're definitely getting out of crypto, according to our survey, and they're kind of taking it real nice and slow here because they're worried that the market gains that we've seen so far may be petering out so far. The optimism for future gains has really dialed back in recent months. Investors have looked at what's going on in terms of the COVID spread, in terms of what's going on with markets at record highs. They're worried about a bunch of things, including inflation and spending, and we're going to get a lot more of it, Dom.
So Caleb, can you put those results for the latest survey in context for us? Over the course of the last year, how exactly has that sentiment changed or shifted? Is this a real big move in terms of sentiment lower versus what we've seen over the course of the last 12 months?
Yeah, it's definitely a pullback in sentiment where they're kind of waiting to see what happens here. The expectations for future gains have been reined back in. We only have about 20% of our readers, 25% of our readers who think the market's going to go up anywhere from 0 to 10% for the rest of the year. We're already up 18%, so the gains have been robust. Most think the market's going to kind of stay where it is or trade a little bit lower as we go into the next 5-6 months of trading here in the stock market. So you have that little pullback. It's not extreme, but you feel that in the sentiment, and you feel that in terms of what they're buying and what they're selling and what they want to hold on to. As I mentioned, they're pouring into index funds now. They're going to let it ride here instead of stock picking as much as they used to do, and certainly instead of crypto and some of the option bets. So you see that risky behavior being dialed back in. These are individual investors. These are folks who have been in the market a long time. They know what they're doing. They're Investopedia readers of our daily newsletters. So they're kind of getting a little bit reticent to put more money into the markets. It's not extreme, but it's that first tipping point. And you're starting to see it in other sentiment surveys as well.
Caleb, any indication on exactly which parts of the market? I mean, you mentioned the crypto side of things. You mentioned options. You mentioned the tilt towards maybe using index funds and that sort of thing. Are there specific parts of the market, equity, bond, crypto, or otherwise, that appear to be, to your readers, more bubblicious perhaps than other parts of the market?
Yeah, this surprised us a lot. We asked them every survey, what part of the market do you think is in a bubble right now? And what we thought might be Bitcoin, what we thought might be Doge, what we thought might be some areas of the stock market, it's actually U.S. housing market, Don. What U.S. housing prices are up 13% year over year. We've seen the blistering rise in sales going on across the country. So they think the U.S. housing market's in the biggest bubble. Following that, they do feel like crypto, Bitcoin, and Dogecoin are still in a bubble. They thought that a couple of months ago. They still feel that today. But stocks only that ranked third in terms of their list of things they thought were in a bubble. So it's not as if they think the stock market itself is in a massive bubble. 60% always say we're a little overvalued here. That's kind of consistent through our surveys, but it's the housing market that's got their attention right now, and for good reason. A lot of these folks own homes or they're thinking about buying homes, but it's the housing market where 38% of our respondents say it's getting a little bit bubbly out there, and that could be trouble going forward.